Here we have the hourly price chart for Meta Platforms Incorporated, stock ticker META. Here we can see that the Facebook parent company is falling victim to the wave of broader selling pressure that's being seen throughout the market here. We've seen similar price moves. I just posted videos on NVIDIA, Apple, and Broadcom. We're seeing similar movements here to the downside in a large number of these stocks. And it looks like we could be in for a bit of a further decline here if we don't start to see some support levels develop soon. So if we're pulling out here a bit, we can see that we do have some prior support levels that have been outlined here, but we've already fallen through some significant price levels en route to the current lows that are posting at just above 519 per share. So, in particular, what I would want to point to when doing some analysis here and trying to find some support levels, I would want to point to the this trending movement here, this bull wave that occurred here, where prices reached lows of 493.17. This would have been the low from July 1st, and then ultimately posted highs of 542.96. This would be the all-time high, which was posted on July 8th. So as we can see here, we do have this dominant, highly influential bull wave here, but it does seem like we're starting to, retrace significant portions of that move. So here we can look at the Fibonacci retracement zones to get a sense of what is most likely to occur next for this stock. As we can see here, we have already broken through the 23.6% Fibonacci retracement of this move. This level came in just above 531.45. Fairly quickly, this move occurred. I mean, this really occurred in the same hour that the all-time high was posted, and this was a bit of a warning signal here because, as you can see, if we kind of zoom in here, we can see that this is a bearish engulfing pattern. What this really means is just that you've got a prior bullish candle here, a green candle, followed by a red candle that's much larger in size. It really kind of encompasses the highs and the lows. It engulfs, literally engulfs the prior candle. So we can see here, this is a warning signal here. This is a 2-candle pattern, which did suggest that we could see prices start to move to the downside. Because you had, in addition to the fact that this price pattern is occurring, it's also occurring at the all-time highs. That's significant. I mean, it does suggest that the current rally may have become overextended. As that was occurring, we did have the relative readings in the relative strength index move above the 80 mark, which would be considered to be heavily overbought. So not totally surprising here to start to see declines following a significant rally to the top side. But currently what we're having to deal with here is the fact that prices did find support on July 8th. We posted lows of roughly 526.66. And then we did see a bit of a rally from here, but the rally that ensued from here was marked by lower highs relative to this engulfing pattern that occurred previously. So there are some warning signals here that suggested that prices were ready to start to move lower. And then in addition to that, you have the fact that there are broad sell-offs in the market today. It's not even just in the tech space. The index, the S&P 500 index and the Nasdaq are both trading much lower. There was an inflation report that came out earlier today. It didn't really have much of a positive effect on the market, as we can see. So most stocks at this point are heading lower. This isn't a Facebook specific story. Many stocks in the market are currently trading lower. So as we can see here in this latest move, we have already lost the 38.2% Fibonacci retracement of this dominant bull wave. This level came in at 524.15. And this level was significant because it also matched fairly well with the 50-period exponential moving average on the hourly chart. So that would be the 50-hour exponential moving average. So we do have a break of support here, and this is a significant break of support. It's not, we're seeing some heavy follow through here, and it's really not much of a surprise. Currently, we're dealing with this purple line here, which is the 100-hour exponential moving average. So we'll see if we can get a bit of a bounce here. But I'm not too optimistic about that because there really isn't any other technical indicator here to point to, which could strengthen support at these levels. We don't see a historical support zone. We're not really seeing a Fibonacci level in this area. You had the 50% retracement a bit higher, but we've already broken through that level. Currently to the downside, what does this mean? Where do we head next? Currently to the downside, what I would really be watching would be this 618 retracement, the 61.8% Fibonacci retracement of this broader trend move here. It's a bit more significant because we do have some resistance turn support levels that are fairly close by. Um, as we can see here, the 618 comes in at roughly five. It's a little hard to see here. 512.34 is the 618 retracement. That's sort of this teal line here, and this does come in fairly close contact with some prior highs that were generated during the July 3rd trading session. We do have a bit more confluence here between historical price zones and Fibonacci levels. I would like to see a moving average in this area as well, but it doesn't look like the 200 period exponential moving average is moving upward quickly enough to reach this level by the time we would be encountering this price zone. So we're continuing to drop here, as you can see, and we are now moving through this 100 period EMA. So these are negative warning signs here. This is not, this is a fairly major sell-off, and it's broad-based. So, it's not exactly, there's not exactly a positive environment here that's likely to support prices. A rising tide lifts all boats. That's not the environment that's occurring right now. You can watch the videos on NVIDIA, Apple, Broadcom. I'll do Super Microcomputer next. But all of these stocks are trading under fairly significant selling pressure. This isn't a one stock story here. To the downside, my kind of critical level here does come in at roughly 512.30. Because this does match up fairly nicely with some historical resistance zones, which would now be expected to work as support. And then you do have the 618 retracement, which is typically the most important Fibonacci retracement level. So, this would be the price level that I would be watching if you wanted to be adventurous and try to buy into this area. I would probably wait to see if there's a bit of a bounce here first before doing that, and then probably keep your stop losses tight if you're trading here on an intraday basis. But it does look like there's a lot of selling pressure here. And we also don't have any additional moving average support. So an ultimate break through this 512.30 level would not be a complete surprise. So here's the current market outlook for Meta Platforms Incorporated, stock ticker META.